Good morning. Yes, indeed. Kristaps already took part of my speech away. I indeed want to say that we are going to go in depth as to what is happening in financial markets, and indeed we will look at what has happened in financial markets since we last met. Indeed, let us continue. For the third time, I will repeat what was said already. The last quarter of previous year was very successful, speaking about investments, which is very good for the beginning of this year. Last year was quite good from the perspective of investments. Of course, we were basing ourselves on not so good results of 2022. All the bonds and stocks did not perform quite as they should, but last year was the year of stabilization, and later on the time for recovery of all those equities. You can see the chart with the last 3 months. Last time we met was quite a bleak period, and I hope that now these 3 months will have a continuing upward curve. It is important to stress one more time that for financial markets and for rates of stocks and bonds, the year has been quite successful, starting from the end of 2022 or the 23, and I hope that year 24 will continue being quite the same. Or even better. Of course, there will be economic processes and elections of European Parliament, monetary policy, central banks' rhetorics on events. Those will be affecting factors, of course, that will impact equity prices and for longer periods of times. Here you can see what was expected for the end of the year. U.S. Treasury bonds, I think, will return to the previous peak period ratios, but for safe bonds, the level was very low since 2022, but the recovery process has already begun. Indeed, on the right-hand side, you can see a close-up of the last month. As soon as rates or echelon rates or even thinking change, that impacts sentiments, but here you can see the safest U.S. Treasury bond that is with an upward curve, and it can be compared with performance of share markets. Shares are equities that bring the biggest return, but it is the most risky equity. That's why maybe the change of the prices of bonds can be quite rapid, but with an upward trend. For the return of financial markets, for financial portfolios, those are bonds and stocks together. This is the same, but from the portfolio perspective. 50% shares and half and half risky and half or aggressive, conservative and balanced. This performance is how it looks like. If we look at 2023, indeed, the results can be considered to be good, and the last quarter indeed was the one who brought everything in order. 3 months ago when we met, the picture was quite the same, be it conservative, balanced or aggressive part of the portfolio. It all represented and prominated in recovery. The last quarter was the winning quarter for the year, and we saw for conservative 5, 10 for balanced, and 12 for aggressive return. This is what has we were talking about the past, but what to do now? I think the answer is to buy. But what are the specificities? What are we going to do for our clients? I'm speaking about bonds. Portfolio evaluation and market evaluation usually ends with portfolio allocations, and the neutral allocation or guideline for allocation results in our choices, investing in aggressive or more balanced. It depends on the situation in the market. At the moment, we are in the balanced or a neutral allocation. Right now, the same as before 3 months, we are in neutral allocation, irrespective of the content of portfolios. We are not avoiding any of the investments, but at the moment there is this European trend being neutral, being cautious, but we will return to that when talking about economy, because it is never separated. Investments are never separated from economy as such. There is no secret that private consumption is the driving force. So the question is, are people having money at the moment? Because at one moment there were decrease in savings, but in Europe and USA, many are speaking about increase of salaries. Is that actually resulting in increased purchasing power? Yes, you started the thought, but how to finish it? The topical issue in markets regarding economies since 2022 throughout 2023 and also now, if we are looking at macroeconomic climate, we are still being very cautious. The economies are growing relatively slow. We do see some problems. There are things that might be even considered in recession, but this is the threshold for slowly grow, with several challenges, several risks, with high rates. So last few years we have spent being cautious, trying to find out and having sentiments between depression to being very cautious, being very neutral. That's why we return to one and the same indicators that are important. But indeed, the recession as we understand it, when everything stops or many things go bankrupt and it's really bad, it's not the case now. We are much more, we are in a much more better situation. Of course, some indicators might be lagging behind. Some might be in the negative curve, but this indicator is quite promising moving forward. But we should look in the rearview mirror always. Increase of salaries is also cautious. Inflation is kind of getting more relaxed, and this muscle is being taken care of. But at the same time, we can talk that income is increasing. People have increased purchasing power, and that's what they are doing that. These are commodity goods. We are usually looking at this chart. These are not services, but in services, the picture is quite the same in Europe and America. In nominal prices, indeed, the rise is rather rapid, but Eurozone real prices or numbers of goods purchased, the trend is also stable with a slight positivity. We are usually talking about USA, but we will see indicators for Europe as well. In Europe, the growth ratio is usually slower. And when something changes in the USA or drops by a percentage point, it usually means complete stop or be pushing brakes in Europe. So Europe is much more cautious. If we look at the global economy, because everything is connected, US impacts America, Europe. Europe impacts the rest of the economy, but in general, consumption is still upward, and we do not see recession. Can we say the same about Latvia in the region of Baltics?
We see in Latvia, from one side, if we take a look at the income of the job market, we see an increase of salaries, more than 12% over the last quarter. We see, after all the indications, by looking at the situation of clients, for example, how much people receive in their banks, we see an increase, and quite a considerable increase. At the same time, if we look at the sector of trade, then both in volume and both in means of money during the last 3 or 4 years, we see fantastic growth. So from one side, we could have a question. The income is growing, but consumption is not. So we were trying to look at the incomes of households. There, that's a bit more different situation. And then what kind of a turnover we have in retail trade. So we see in perspective that both things have grown. At times, income is growing faster than consumption, or vice versa. During the COVID-19 pandemic, when we were sitting at home and when we received different benefits from the state, of course, then there were more savings in people's accounts. But from the start of 2022, the consumption grew very, very rapidly. Now we have more expenditure, for example, the Euribor rate and higher rent or higher different bills that people have to pay. But at that moment, we saw consumption was considerably higher. Households are using everything to maintain they're using all their savings to maintain their level of consumption at that time. So the number of loans has increased, but the positive thing is that income is finally catching up with consumption. So this contradiction that income is growing but consumption is at the same level, then now we see the dynamic between the income and consumption. It sounds like a level of normalization where we see the situation becoming more stable. I wanted to talk about credits. From one side, people and companies were more cautious when at the same time banks here in Latvia, also in other parts of the world, were more cautious in case there were different changes happening, to kind of wait for the maximum amount of rates. So, in conclusion, perhaps a person who's taking a loan or a company who's taking a corporate loan, it wasn't certainly clear what's going to be the situation like in the next year or in 2 years, so they maybe were a bit more cautious when considering taking up a loan. Also, when buying a house or an apartment, people were thinking maybe I shouldn't be doing this right now, maybe I should be doing this a bit later when the situation is more stable. In the USA, for example, where the rates are stable, you really have to think twice whether you want to do that right now. But while the rates are growing, where you don't really know where the threshold is going to be, then people are not all working in banks, people are not all checking rates and checking different economic indicators every day, then of course their understanding of the situation was a bit blurry. To be honest, we were talking about this a few quarters back. I think that banks are becoming more and more cautious, not giving loans so much. This is a concept that I don't really believe in that much, because for some time we were talking about these extremes, the 2008, 2009. So if people say that it's hard to get a loan, maybe just the demand has gone down a bit, and maybe the demand has impacted the way the corporate loan or just loan number has changed. If we take a look at the bank sentiment in general, what happened during the last months, the unclarity has kind of went away. So this immediately started to impact how banks feel about it and how banks are giving loans. So they are ready to give loans on better conditions. Also, entrepreneurs and people take loans. The number of loans during the last 3 months in Europe has increased, which was kind of a surprise for me, but it is a fact. In the USA, it continues to grow, a bit slower, but still it continues to grow. In the Eurozone, we remember that 3 or 6 months ago, all these indicators were going down, but now we start seeing an upwards shift. So if we take a look at the overall dynamics, then that is important to take into account that the situation is getting better. If we take a look at the last half year or maybe the last year, then the situation in in loans, the situation in money flux in state's economy, the situation is overall getting better. It's very important to take a look at credit standards. For example, if we look at these things, we try to finding whether there's recession going on or not. But usually these sort of growths are happening during the recession. So the growth has happened, now it's starting to come down a bit. I see, this is not the first picture I've seen when people say that this is the recession, we're going out of it, but economy is very well dealing with itself. This is kind of a signal that we are usually waiting for, but things have happened better than we expected them to happen. The same thing in Latvia. Crediting and giving loans has slowed down. There are new, so the increase has gone down, of course, but it's not so drastic as we thought it would be. At any graphs or tables that we look at, we always come back to 2020, but really it was something that I don't know what exactly it changed in people's brains. I doubt that it was really a joke. It's not possible to change anything in people's minds, but we are still living on the same wave where we are being unstable, the wave moves. The same thing with COVID was that everything stopped, and then there was a huge afterblast of the wave. People and companies, everyone took loans, the rates were low, economy was growing. We thought that inflation has gone out of hand. So we have to take all of this in quite a relative sense. If we have more strict credit standards, then that is just sensible in comparison to how non-strict they were in 2020. A question that is specific to Latvia. I do not know whether these people in this hall would be the ones who could answer to this question, but maybe we can, during the break, find a representative who could answer to an important question that we have received. Yes, and I would kindly ask you, for all those watching, ask questions as closely to the subject as it's possible. Before we talk about consumers, another important part of economy is producers. And basically, for the whole last year, this sentiment was overall going down, and they were quite pessimistic about what awaits them in the future. What does it look like right now? So the producing sector and what we see in the producer sentiment indicator and economic sentiment indicator, it generally looks like this. In the USA, it also looks quite similar. Since 2022, since the beginning of that year, we see the sentiment indicator. This is about whole economy. This is not. One of the longest periods was when producers' activity indicators were below 100 or below 50, depends on how you count it. They were in this zone of contraction, so recession. So this indicator that you see about the Baltic states, as much as I remember while working in this sector, this is something that economists are just, they have the habit to predict what will happen with the economy in general in the future. This explains a lot. So this indicator is in the recession zone. It's one of the reasons why the predictions of economists are quite cautious. If we're talking about recession's always in the year. The sentiment indicators are in the so-called stagnation zone, recession zone. But coming back to this, we have also talked about this. It depends on what is a lot and what is not a lot. Why we have this pause, why we're having this time of slowing down, is because there was a huge wave of spending. People were spending a lot of money after the COVID-19, and during the COVID-19 there were times when there were just ships standing in harbors in the USA, and they were waiting there for days and months. So it suggests that there were not a shortage of products. It was just that the demand was very, very high. If we take a look at this right now, we can say it was sort of a hangover after the year of 2021. That was something on the extreme. Because our indicators are right now in the recession, it's a normal part of this whole process. It's a normal, we're calming down after this situation. If the index is above 50, then it's growing. If it's below 50, then it's going down. We saw this huge wave in 2021, and then we see the situation becoming more stable, becoming more normal, the way it was before. If the indicators are in the recession zone for one more year, for 1.5 years, then we can really say that there's an important problem that has started in the production area. But now, right now, we cannot say that everything is bad and that things are bad. We can just say that the situation is going back to normal. When there is recession, one area can go down and then starts a wave of other things that are being influenced by that one area. So other areas go down as well. After the COVID-19 pandemic, the shifts were considerable. Now we see a bit a more stable situation. We see a growth that during a normal economic cycle we shouldn't be seeing this right now, but then we also have to take into account all the different things that happened. The consumption increased considerably faster than incomes increased. So I think that we see the same thing right here as well, that many people look at the recession, especially in the production area, because that would be a signal for the whole economic situation. But really, we have to take into account all the other aspects. The general sentiment in the Baltic states has started to improve in producers' sector because of this so-called hangover, because there was this high demand. People started to stock up many products. Now the situation is starting to become more stable, more normal. We see that during the first part. We saw that during the first part of 2023. Where I really see a significant difference is in the indicator of Estonia. We are focusing of late that Lithuania is far ahead of Latvia, but right now we are seeing that Estonia might be getting to our level, like falling on our level. I think that they have an unsuccessful situation if taking into account the percent rates. If we take a look at their situation, it might be getting closer to the situation they experienced in 2008. It touches and influences both households and companies. That is their weakness if we're talking about Estonia. Estonia is a very popular IT company. So also they have been hardly influenced. They have been influenced quite heavily by these interest rates. So that is an important thing we have to think about. This time the indicators are not good for them. Talking about the fact that there were ships standing in harbors, and then there's one question from a client about a topical subject: how will the crisis in the Red Sea impact a Western economy? So maybe here I would have to give a bit of insight. The Red Sea is the entry in the Suez Canal, which is a very active place of trade between Asia and the western part of the world. We have had a short moment where we noticed a problem. For example, there was one huge container ship that got stuck in there, and that immediately increased an increase of cost in transportation. We have already seen an increase in transportation costs for container ships. When that ship got stuck in the Suez Canal, there was high demand at the time, and then one container ship blocks everything. That was a very unfortunate situation from the aspect of timing. Now we see that the demand is not so drastic, but of course we see an increase in transportation costs. The question is for how long it will continue. If it continues for months to come, then maybe we will have some impact on prices for certain groups of products. Also, the Canal of Panama is also being influenced right now because of drought. So this impact will have, this will impact both the transportation costs and also inflation, right? We don't know for how long this will continue, but most likely yes. Inflation is when I find myself thinking that we have a very economically active generation, but we found out about rates only recently. We were not talking about rates so much 10 years previously, but in inflation also at the level of sentiment, we can feel in Latvia that the situation is getting better, but what does it actually look like?
Yes, indeed, annual inflation throughout last year, as well as now, is behaving quite well as central banks and economists expected it to behave. Year 2022 was quite different. Every month we had surprises when we thought that it will stop growing, but it actually sped up. But since the beginning of last year, this gradual breaking and recession occurred because the peak was reached as forecasted. Although the forecast is as it was, from 7 to 2, from 6 to 2, and 2 is finally there. Inflation, annual inflation of 2%. The reason for fall is the increase of prices. Some prices, of course, are going down. For example, fuel prices are fluctuating similar to inflation prices because that is the driving force of the market. But I'm talking about other commodities, dairy or cereal. But we are not talking about decrease of prices. We are talking about slowed down increase, which is impacting stabilization of inflation, which is enough for central banks. The forecast for the future, looking at this year, for us and indeed in general, the sentiment is the following, that the speed of inflation will stabilize. Maybe it will go down a little bit, but it will stabilize and it will be higher than the previously seen levels. It will be a bit higher than what we have been used to throughout this century. And you can look at our what we saw during COVID, or what happened with the canal where the ship was stuck, and other crises. But we take care of that, and we take into consideration all of that. But after the previous dramatic increase of inflation, it has changed thinking of people, and people are more cautious, they're prudent against that. And let us see how how we will behave. I think that we will continue to operate, as well as companies, manufacturers will continue operate. They will not slow down and see what will happen with inflation. They will continue their operations as well as economic activities. And I think that will be good because that will level out or stabilize this inflation. Of course, we have to look at the fluctuating resources, foodstuff prices or fuel prices when reaching 75 or 80 dollars. That's the same price as 10 years ago. With fluctuations in between. Foodstuff prices is also something that is fluctuating, but always falling back to previous levels. That's why the basic inflation as well as current inflation is stabilizing, except for direct resource prices that might again fluctuate or follow events in the market. I am thinking about going to Greece in summer, but prices are still 30% higher than I used to pay for hotels in Greece. But maybe you should check the hotel prices, and the price in a week will grow by 5% yet again. This is our way of thinking. This is what we have been used to during the last year, and we are too prudent and thinking in that way. What about the Baltics? What about traveling around here? Two pictures about Latvia. This is basic inflation without foodstuff and fuel price. What is an economist seeing? The left-hand side picture, but people see the right-hand side picture. The food prices are 30% higher than previously. These are two different pictures. Of course, the inflation is still there in the ratio of 3.5 to 4, but since last year, March, when the increase was huge, have fallen and stabilized. But indeed, if we look at the expectations, we can measure them in different ways, but I believe that stabilization of expectations as well as sentiments have stabilized, although if we compare with the last 10 years, the inflation is indeed rather high, and this feeling is still there for the inflation to go up for sure. But we have to look for answers and look into greater detail. Global prices are fluctuating, but internal local prices usually are being set at the beginning of the year. Usually prices are set for companies, for goods, at the beginning of the year, and then they are quite stable. I think that throughout this year, the prices will stay the same, and thus inflation will be stable. But let us see what will happen at the beginning of the next year. From inflation to rates, to interest rates, repricing during the last quarter took place. But what can we expect? Repricing, massive repricing took place during the last 3 months for all rates, and the dam was kind of broken, and the river runs free since October. Until now, the rates kept rising, and we thought, where does this come from? This is too excessive. But then at one moment, with one comment from central bank, with 0.5% point for the fall of inflation in US, it all went down very, very rapidly. Here, the dotted line, you can see what happened 3 months ago, and the thick or bold line indicates the situation at the moment. Those are dramatic changes within the last 3 months. What is expected? That indeed central bank rates will go down, both in Europe, and Federal Reserve will lower their rates. We will be able to see that in 2025 the rates will be 1.5% lower base rates I'm talking about. I have a feeling that we have market expectations and then there is parallel consensus. Indeed, the repricing will take place, especially central banks, and all the analysts afterwards are saying that the market is mistaken. The repricing with such a decline will indeed not take place. It cannot be true. It is a bizarre situation. So why we can't expect such a rapid decrease of rates? There are several questions asked by our clients. Euribor 3 month, that topic. How much the data from disposable income or disposable rate, the blame was on interest rate. It actually does not concern Latvia so much because we have a loan of 5 billion, 5 billion only. Now it is 4. So the difference is 1.5 billion, and Euribor accounts for several million. That will impact household loans or corporate loans very little indeed. You don't have to worry about. And one more question that we cannot avoid on rates. When in US the rate went down at a more rapid pace than in Europe, and the dollar rate went down as well. And what is expected this year? 3 months ago, the central thought that we had was as soon as rates will stop rising, euro against dollar will start rising. Usually in US, all the processes in both ways take place at a more rapid pace. So for forecasts, it is not quite a good explanation, although it is much more true and much more accurate than other methods of forecasting what will happen with currency rates and markets. Now we have gone into the period of a long-term phase of decrease of rates. Slowly, economies will recover, and this will be a positive sentiment, result in positive sentiment. This is what we have observed during last year, and I think it will continue. If there are no excesses, as we observed last year or in August the year before, when the increase was so rapid, this is not true at the moment, so it will not be true. So what, how rates impact commercial property market. In US, this connection is rather close, rather tight. What is the situation in Latvia with commercial properties, with immovable properties? We have about the same process. If rates are higher, then investments go down. Or the prices should go down for increase of investments, but we again don't have any dramatic fluctuations in this market segment. Of course, there are some offices that are closing that no longer wish to lease premises or buy premises, but historically the offer has not been so big as to impact the market in general. And before a small break, what are we expecting from the economy? We talked about details, but how it goes together. Let us continue the global macroeconomy part. The global message is the following. The economic sentiment is becoming much more brighter than it was 3 months ago. So this is an illustration, although difficult to explain. So these are forecasts of economists, GDP against inflation. So if this curve is with an upward trend, that means that the forecasts of economists have become even more positive. So this is kind of sentiment or forecast of economists. And if it is a downward curve, then it is the other way round. But the overall thought with those charts, this economic thought is with an upward curve. But there are some nuances, some buts, and differences between US and Eurozone. In Eurozone, this economic thought and even forecast is still negative. But again, America again sets the tone of the game, because they, as a huge stomach of the world, digests and drives everything, forecasting everything in a much more positive way. And if we look at it all together, this economic sentiment with an upward inclination. And what's important for markets, the markets are becoming better than they were 3 months ago. So, at the moment, I have to ask one more question, very topical. You said that US is bigger economy, and of course, what will happen after the elections? What will be the results? Theoretically, how it can impact. Historically, the impact of elections were not huge. There are other institutions, there are relativities of market. Fundamental changes did not take place. Bernie Sanders will not become a president, so a market economy is there to stay. The last years of elections actually make us think that indeed markets might fluctuate for one or another reason. But then the night before elections is the time when you should buy. In the morning it's too late. The last 2 times for Biden and for Trump, I played with the fall of the market. The first time I indeed lost some money. The same happened with Biden. I thought there will be additional corporate taxes. There will be some other issues, but it was not true. On the first day of newly elected president, the trend was upward going again. My forecasts were not accurate. At the moment, I offer you to take a 5-10 minute break and after that we will continue with financial markets.
As Walter's already mentioned, and we already mentioned it, right now we are expecting the rates to go down, and of course this is all interlinked. It's not like loan percent are not linked with different other rates and profitability. So by continuing about finance markets and the story about rates, we have to talk also about this in the sense of bonds. So this is a short forecast in the future. 3-4 months ago we met and then we were at the highest peak. This gray line is the zone that differs different monetary policies. There was this is about the USA. We had previously shown also this about the European Union. If it is a factor that is promoting something, then it is above the level. If not, then below it. The base rates that are there, we see many other things being added there, Euribor, that are dependent from base rates, and that is also important for the market of the USA. We see the rates going down quite considerably in the graph. There has been a sort of a stabilization of rates. If the central banks see that inflation is not that critical of a problem as it was surely during the last years, then there will be no need to press the brakes in economy. So most likely we will start with the stabilization of the whole situation. There is still some place for improvement, of course. I was at the end of November in a closed meeting with the economists of the European Central Bank. So what their thoughts were, and I think this picture shows it very well, is that the rates are above the neutral level, and even when we start to decrease them, this policy is quite restrictive. So I think that is another aspect that might show up at some point, that when we go back to neutral rates, that might mean that that doesn't mean that policies are getting less strict or more stimulating. Nothing in finance markets has never happened only in one direction. There's always shifts. There are always things that are moving. One time it goes up, then afterwards it goes down. The direction has started to move towards the level of stabilization. Right now, the next step would be if we push the brakes and we start to take serious actions to help the economy, but that would be already the next step. Right now, coming back to financial markets, to their performance, what we can expect from them, then again, the highest peak was during autumn. I saw the same graph back then, and then the message was that bonds are patiently awaiting for their investors. So it seems that patience comes to an end at a certain point, and now we see that the yield of bonds has gone down a bit. It has gone down by 100, 200 basis points. Bonds are with long terms, for example, 10-year government bonds or 7-8-year corporate bonds. That is the average length in the US financial market. That means plus 10% in its price. That 1% point, that's quite a lot. During last year, there were some expectations that people are going to buy it. We were waiting people to buy more and more bonds. So that good rate we saw there, it's gone now. So basically, we will not go back to the same zone again for the second time. So this is what has happened. Now, what are the forecasts? About the yields, we see that they are quite high. In speaking historically, I just wanted to add that something has already gone, but in reality, the level is quite high and it's quite attractive, right? Yes. In financial markets, if stocks go down, what will happen in 3 months, whether they will continue going down or they will stop going down. This is always a certain uncertainty about stocks, but right now the price is quite good and we have to take that into account. The situation has got better. Of course, investors and also us, we would like to see a positive trend. We don't want to see always things in red, minuses, so you kind of lose credibility then in that case that something is working in the good direction. So the movement has started, prices have started to increase. This is what we see very often, that the historical result has a huge impact on the way we act in general. If the positive trend has started, I think that will also motivate investors to go through this possibility or maybe just to stay in the market, not only to enter the market. This is a calculation for the next upcoming 12-month period, what the yields might look like in the future. Of course, this is all calculated in euros. Nothing, we have not missed anything. We still have possibilities. The rates are still going down. It's possible to invest still just because of the impact of the stabilization. If the economy is not going so good, then the stabilization will continue even faster. So upon different scenarios, we can await quite a respectable income, quite a respectable yield for the next 12 months. What I thought is interesting when doing this is that it's quite similar in all sectors, but we see a bit of differences in certain places. One thing with bonds is that I have to note as well is that there are these so-called risk premiums that have gone down in the market and especially in the USA. We are talking now about a level that we experienced in 2021. And that was a zone of like very cautious optimism. Then this is again the same, we are again in the same moment where we have potential, a lot of potential for bonds, and the outcome and the forecast looks quite positive. Of course, when talking about psychology, then a year ago there was a 20% inflation, then the yield did not look that attractive. Now the inflation has gone down a bit, and of course then the yield will seem more positive and more profitable. This is a situation we have not experienced for a long time. We have talked about bonds, and we saw a very good results of the stock market. Now, another question from the customers is whether that was linked with Magnificent Seven. If we talk about the market, for example, the US 500 index, because they create a large part of all share market, then that's why exactly we are specifically paying more attention to this index. I'd say in general that the US market is not cheap. It has never really been cheap. It wasn't cheap in the October of 2022. So it was cheaper than it was at the end of 2021, but it was not cheap by no means. So we cannot say that it is cheap. At the same time, if we take a look at the company profits, this is one of the main two aspects of the S&P index. What are the profits of companies, and what is the amount of money that people are ready to pay? I'd say that the situation is okay. Of course, the forecasts have been looked through in January and February when there was a downward trend. I say we have a level of stabilization once again. The situation was quite drastic there. We were waiting for company profits to increase by 15% per year, which is of course not possible. It's rubbish. I'd say that the forecasts are now more stable, more normal, they are more sensible. This is important for the market to kind of predict what will happen in the future a little bit. For example, $260 for one index unit. That is quite stable, that is quite attainable. We have tried to analyze this from different aspects. It could be like this, it could continue like this. There is not too much of optimism or pessimism, maybe even a bit more optimism than pessimism. So that is a good situation. And now we can add to this how much the investor will be ready to invest. For example, if everything keeps growing, if there's a lot of money going around, then we are talking about an excess optimism. Then perhaps the index might reach up to 5,500. I wouldn't say that this will actually happen when looking at the situation of the last 5 years. We are creating this range every year. We make forecasts at the beginning of the year, and then we look at the situation at the end of the year. So then we really see what happened, and we really see the situation. What we could expect more realistically is that the level might stay the same as it is right now. It might be 4 or 5% higher than it is right now, and of course there is some sort of negative trend that might happen. Talking about Magnificent Seven, I can say that I'm not thinking about it like it's not something relevant. I think, in general, that these companies that are there right now, I don't even remember all of them by heart, but they do create a large part of income, a large part of profit, so they set the mood for the US financial market. And that is reasonable. They have their own reasons for that. Margins continue to go up, 60% margin from $100, so $60 means profit. So yeah, financial results are really good for them. it's worth paying for that. It's not a bubble that artificially generated. But what I think is important thinking about when something might happen to Meta or someone else, that they might stop growing. If we look at the history, maybe 70s, 80s, if we look back at them historically, how profits have grown, they have been growing in forms of waves. It's not like a direct straight line. The trend is upwards, however it happens in waves. From the growth is 6.5 up to 7% a year. Now there are Magnificent 7. A few years ago there was Magnificent 3, then there were other banks, then 100 years ago it was trains. Something always is being the leader and making and aiding at the whole game so that everyone can play.
Yes, this is indeed what I'm talking also to my clients. I'm telling them at this situation, this is nothing that we haven't seen before, nothing non-precedented. And Magnificent 7 is also reflecting the same. The negative scenario for Zigurds was 3,200, but I think he also corrected himself lately. I did it because some years ago there were other levels. If we look at 2023, the profit of companies have been stagnating during last few years. In 2023 as well, it is the same as 2022, which is stagnation, and which means very bad consequences for US market. What I've heard until now, normalization is happening both in the market, in rates, everything is normalizing. Also, the question is, what can we expect with what you've, on the basis of what you've said? Nothing happens a straight line. Maybe in 3 months there will be a better moment to buy or sell. We cannot guess. The longer you are in the market, the more you understand that the only thing that you can do is guess for the following 3 months. But in general, looking at and analyzing, when 3 months ago we met, there was this lowest point reached, and we said that the potential for normalization is already profitable, which future potential which allows to guess for the future. Here, do have a look at the visualization. Do not look at figures. Normalization has happened. Excessive potential have been lost, but we can still afford to invest. You do not see excessive or blown up prices. The levels are quite perfect, at least to stay. When looking back 3 months ago, that time it was perfect to buy, but at the moment I would say it is quite okay to buy. If we look at this model of a balanced portfolio, I'm talking about portfolio, not a deposit. the average forecast was 6% per portfolio. Now the forecast is 4.5, and you can compare with other possibilities and so decide by yourself. Returning to the previous pictures, strategy and allocation of portfolio, I believe that this indeed is the correct picture worth mentioning. Let us not go into each and every structure of those portfolios. This is an overall picture, but the message is the following. We have put our attention on stocks, European stocks. But what I also wanted to say, those who like shares, European shares, better than US shares, we can offer or it can appear in your portfolios, namely shares of Asian companies. But what is happening in developing countries, when we are talking about developing countries, we are talking about China. Stock market is quite cheap. Investors have avoided it, maybe for the right reasons, maybe it's correct. Before they take a decision on where to go as a country. But some other countries or some other markets or developing markets are quite expensive. Latin America or, for example, India, they have performed so well then that those markets are quite expensive. So you could look at Chinese part in the portfolio if you are interested in in developing markets at all. But of course, if you can buy something for the same price in Europe or in Asia, then do invest in Europe, of course. We have no other questions, by the way, from the audience, but there is one question that is worth commenting. A question on Citadele IPO. Unfortunately, we cannot say anything more than the information that was publicly announced. We evaluate different scenarios, including IPO scenario. Thank you very much for this conversation, for your time, for you listening. I was so glad to see you all. This is the biggest honor and evaluation for us that you dedicate your time to attend our informative breakfast. Thank you and see you next time.